Hi, this is Anna.
And this is Itzel.
We want to welcome you to Rock Solid Talks, a podcast where we will talk about all that surrounds mining.
Brought to you by Digital Prospector, a mining-focused media company.
So welcome everyone to the new episode of Rock Solid Talks, brought to you by Digital Prospector, a mining-focused media company. This is Anna.
This is Itzel, and today we want to welcome our guest, Thibaut Lepoutre. He is an analyst at Caesars Report and an advisor to Elise Development, an investment issuer listed on the TSX Venture Exchange, and an independent advisor. So Thibaut, thank you so much for joining us today.
Thanks for having me. How are you?
Good. How are you doing?
Doing all right. Thank you.
What sparked your interest in the mining industry? How did you get involved in it?
It's actually not a very exciting story. I just remember that back when I was at university, I was in law school, and I started looking at stock markets, stock exchanges, because it's very dynamic, right? Every day is different. So I think I just started with just generalist companies, like looking into them and see how the dynamics of the market works. And then I think I accidentally stumbled upon a mining company, and that piqued my interest because of two reasons. First of all, you kind of know what the commodity price is, right? So if you invest in, let's say, a pharmaceutical company or a Caterpillar, you don't know what the actual sales price of a bulldozer is or what the actual sales price of the pharmaceutical ingredients are. But when you're looking at a gold producer or a copper producer or any type of producer, you kind of know what the world market price is, which makes it easier to build your own economic models, so to speak. So that actually sparked my interest, and I rolled in deeper and deeper. And after completing law school, I just started that with economic master studies, because it triggered actually my change in studies as well, just because I wanted to dig deeper and get more familiar with the numbers behind companies. Of course, in the mining sector, it's always tough if you're not a geologist or an engineer, so you still need to talk to other people who are much more educated and well-versed in that material. So I'm mainly more of a numbers kind of person. So not a geologist, not an engineer, but fortunately I can rely on a bunch of people who I can always ask for advice or an opinion on that. So to answer your question, it just happened by accident, and I just roll into it, and you roll deeper and deeper, and that's where we are.
Amazing. So interesting, Thibaut. I think you have a very analytical mind, and this is a perfect niche for you to be in. And how do you select companies to make the investment decision? What criteria do you use?
So, as I said, I'm more of a numbers guy, right? So I mainly look at the economic potential of a project. Of course, that makes it very tough to work with or invest in grassroots exploration companies, because then you really need to rely on the geological opinion of other people who are much smarter than I am in that field. So, but once you have a company that's either getting close to a resource estimate or has a resource estimate, you can kind of start working towards some sort of back of the envelope model, right? So the moment there's a resource estimate, you know your grade, you kind of know, or the company should have completed some of the metallurgical test work. So you kind of know what the net rock value is. Then you can kind of borrow the input materials from other companies with similar projects, right? If you're looking at a copper project with an average grade of 0.4% copper with some silver or molybdenum, well, you kind of know that if there's another project next door that either has a study or is in operation, you can kind of use those numbers in processing cost per ton and mining cost per ton. So even though it's still early stage, you can kind of form an opinion, an idea, right? So if you have a company with a 0.25% copper and 0.25 gram per ton gold in British Columbia, that's an open pit, it's likely not going to work. So it's still not exact science, obviously, and a lot of things can still go wrong. But I usually look at things from a purely analytical perspective and see if a project even has the chance of becoming a mine at the end of the day. That's the most important thing I look at.
Right. And I know that you focus yourself a lot on the team of experts involved in the company and on the market, cap structure.
Mm-hmm. Yeah, it's always important, right? I mean, a good project can always be messed up by a bad team, but you can always rely on a good team to make a project work. Again, it's not exact science. There's no guarantees in life. There's still so many variables in trying to develop a deposit or a mine, but a good team usually either knows its way around, or or you can also rely on them to pick the right project to begin with. So teams are important. I think that cannot be overestimated, right? So and after a decade or 2 decades in the sector, you kind of know which people you need to avoid, which I think is more important than following the right people as well, right? So it's so I have a follow list and I have an ignore kind of list.
So in that same line, what are the top 3 jurisdictions, mining jurisdictions in your opinion, and which ones you would say are the most offer the most attractive projects in terms of investment, ease of doing business, return of your investment?
I still think the top 3 would be Australia, Canada, and the United States. I think there's no question about it that if the political framework remains in place as it is right now, you can still do business in those countries. Doesn't mean it's easy, because the environmental restrictions and environmental permitting process has become more difficult, has become more lengthy. So it's not easy, but the moment you do have your mining project, you kind of know that you own it, and not that the next day the president's brother suddenly takes the reins, or if another, let's look for instance at Panama and First Quantum, right? So Panama approved the project Cobre Panama. It operated without any issues for a few years, and now suddenly the government of Panama wants the company to write an additional check to the tune of 375 million a year. Well, that's something you would likely not see in those top 3 jurisdictions, because once your legal framework is in place, you can rely on that. Doesn't mean taxes can change, it doesn't mean royalties can change, but you will never see a drastical switch like you for instance see in Panama now. So it's it's not easy to, no, let me rephrase that. I wouldn't say it's not easy, but it's like it takes time to get anything permitted. But once you've got your permits in those 3 countries, you should be good to go and operate in a reliable framework. So even though there's plenty of other countries that try to put themselves up as a tier 1 jurisdiction, I would almost consider every other country besides those 3 as a tier 2 per definition, because they either don't have the same mining practices, they don't have the same process to get things approved or get things working. So whenever someone asks about safe mining jurisdictions, I always fall back on those 3. I don't think
so. It is Australia, US, and Canada, you said.
Exactly. Yeah.
And what would
Perfect.
you say are the 3 upcoming jurisdictions, like most
Good question.
potential wise? What would be your 3?
It is tough to name names and name countries right now, because there's a lot of countries that are aspiring to become the next tier 1 jurisdiction, but they're still like along the road to get things done, right? So 2 years ago, I would have said that Peru has its act together. Right now, you see Ecuador trying to break into the list of favorable mining jurisdictions. I still think there's a lot of skepticism around that, because it has been closed for foreign investment for so long. Other than Fruta del Norte, I don't think anything else has really been built and operated by a Western mining company. So I would say that even Ecuador is trying. It isn't there yet, obviously, right? So a lot of countries are trying, but it's tough to name like the upcoming mining jurisdictions, right? I mean, I think like Mexico is an established country, but it also depends on the state you're operating in. Not every state is the same. Same thing with, for instance, in Europe. If you would ask me about Spain, then it's extremely difficult, except for the region of Andalusia. So it's it varies, but there's a lot of countries or regions or states that are aspiring to, but no one comes even close to the top 3 mining jurisdictions.
Okay.
Right. Thank you. The next question will be super important for any investor. What commodities would be the most important in the upcoming decade, and why?
I think pretty much everyone will point at the same 3 commodities. That'll be copper, lithium, and uranium. I don't think I'm surprising anyone if I name these 3, but even though those metals and those commodities will be the most important one, it doesn't mean they are the most investable one, right? So with copper, for instance, a lot will depend on the copper price. At $4 copper, most producers will make money. But even at $4 copper, you will not see a whole lot of new development taking place because of the capex inflation and the opex inflation. So then the question becomes like, how will the dynamics between supply and demand change? You are automatically expecting demand to increase, but there's not a whole lot of supply increases coming online or in the final planning stages that would work at a $3.5, $4 copper. So something's got to give, right? Either your copper price goes up, which seems to be the default option and opinion in the sector, or supply will just not be able to follow because the economics don't make sense. So in that way, you would be able to argue that copper will become an important material. But on the other hand, it is so tightly connected to the entire electrification hype that I think the demand increase may be overly optimistic. So everyone's shouting from the rooftops, we need to electrify this and electrical cars, that works in certain countries. It would work in Canada, where your power cost is, correct me if I'm wrong, it's 11, 12, 13 Canadian dollar cents per kilowatt hour. But if you're in Europe, especially now after the past year with the Ukrainian-Russian problems, if you're in Europe and you're paying 70, 80 euro cents per kilowatt hour, which is over a Canadian dollar, then suddenly driving an electrical car does not make a whole lot of sense anymore. So I think that electrification will continue to happen, but not at the extremely fast pace that everyone seems to be anticipating it will happen. Exactly because there's so many dynamics and so many variables that change pretty much every single day. Because at this point, even at this point, it's cheaper to buy and run a car on fossil fuels in, for instance, Belgium, than it is to buy an electrical car and charge it. So that also, yeah. So it also brings us to the lithium question, right? Because the main application for the lithium is the batteries, and of course the EVs are a main part of that question. So the demand for lithium will increase, no doubt about it. Will it increase as fast as everyone expects it to be? I don't think so. What we now see on the lithium markets with the sky-high prices of $70,000, $75,000 dollars per ton of lithium carbonate, I think that's mainly a catch-up moment due to the underinvestment in the entire sector over the past 3-4 years, while the battery companies continue to develop their batteries and then increase the demand for supply. We see a catch-up now, so that even like spodumene, which is just a 5.5%, 6% lithium concentrate, is suddenly catching a bit. That's a metal that was trading at $500, $600, $700 per ton just 2 or 3 years ago, which is now trading for $5,000 per ton. And that sparks an enormous interest in hard rock lithium projects all over the world, which would not be viable at the prices 2 years ago. Of course, it doesn't mean that prices will go down. I think they will, because $70,000 lithium and $5,000 spodumene, I don't think that's going to have, that's a price level that will be maintained for a long period. But I do think that it will sustain at a higher level than we have seen, right? So even at $2,000 spodumene, those new hard rock hopefuls, I still call them hopefuls, will likely still make a profit. At $25,000 or $30,000 per ton lithium carbonate, everyone will still make money. But I don't think we will see or continue to see the $70,000 per ton lithium price for, let's say, the next decade, right? So I still absolutely do not use 70,000 or even 50,000 as my base case scenario for LCE. So I prefer to be more conservative, and even 20, 25,000 would likely be a good start. So even though I think that demand for those metals will go up, it doesn't mean that the current high price for lithium will be sustainable in the future.
And
Right. Okay.
what are the biggest misconceptions about mining? What are you were mentioning now there's this buzz about lithium and energy, and we want to electrify everything, but the reality is that it's not going to happen at the pace that the general audience would expect. So what do you think are the biggest misconceptions that the general public and even investors have about the sector?
I think you almost partially answered your own question there. I think there's still the misconception that everyone thinks that every project will become a mine. That's wrong. That's absolutely wrong. If 1 out of 20 projects actually does become a mine, I would think that's already a pretty high success rate, right? So another one of the misconceptions that I see or hear quite often is people use the gross metal value in the ground to make investment decisions. They think, oh, there's 1 million ounces, gold's at $1,900 per ounce. This is worth $1.9 billion. conveniently forgetting you need to invest capital expenditures to get it out of the ground, that you have an operating cost to get it out of the ground. So a project 1 million ounces of gold that would have a value of $1.9 billion maybe worth just 100 million or 200 million or nothing. So that's why I sometimes don't really understand why people pay over net asset value for an asset. Of course, if there's exploration potential, it's a whole other different story, right? I mean, if you have your 1 million ounces with a net present value of 200 million, but you know that it extends another kilometer further to the east, then okay, it's fair to assume there is upside exploration potential. But when you have a deposit that's fully drilled out and completed, and then you still pay above NAV, that's tough for me to grasp. And that's also why streaming companies are a whole other breed, right? At this point, there's not a single streaming company that's trading below 2 times NAV. So at $2,000 gold, why would you pay 2 times, 2.5 times, sometimes even 3 times the actual value of what a streaming company sits on? Sure, you can see it as the safe way to surf on the waves of a higher gold price or a higher silver price or what's not. But even if your gold price goes up by 50%, you're still trading at a premium to NAV. Meanwhile, it's become more and more difficult for streaming companies to actually refill their pipeline. So if you look at recent transactions, they pay NPV 5% for streams, which is fine, but that is already pretty aggressive in today's interest rate climate, right? If you're only discounting future cash flows by 5%, well, at this point, you get more than 4% for a 5-year US Treasury bond, then something's got to give, right? So it's I think that's another misconception in the market, that streamers are a must-have. I understand that they are a good part of a portfolio and that they provide stability, but it doesn't mean they are cheap. So I see them as more as a rock, but it shouldn't be the major position in any portfolio. They're perfect bear market vehicles. They're not that great in bull markets.
Which of the precious metals you think is going to be the most valuable investment in this coming year?
In the coming year, that's a tricky one. If you'd ask me about the longer run, I would say gold, because everything always comes back to gold.
Yep.
If you'd ask me for this year, it looks like silver is heating up right now. At the current silver price, every producer should make money. But then on the other hand, silver is so often a byproduct of other commodities and mines that you will see some sort of secondary supply. I mean, it's not the real secondary supply, but a lot of projects will produce silver without them being a silver project, if you know what I mean. So you can expect, or I would expect, the strength in silver to continue for this year, but it doesn't mean that it would be a metal for the next decade, right? Because if you have a massive new copper project with a silver byproduct, well, if that produces 5-6 million ounces of silver, well, then that skews the equation again, right? So if you limited my question to this year, I would say silver. If you would ask me about the longer run, I think all gold is just the place to be, and it has always been. It has always had monetary value. It's always been used as a backstop for countries and foreign reserves, and silver just doesn't have that status. So of all the precious metals, I mean, I think everything but gold is more an industrial metal and should be looked at from a supply-demand perspective, while gold is the only real precious metal that has alternative uses.
You have to be a speaker at every event, please.
To like, and I spoke at PDAC in the past, but it's I don't know. It's all people want to hear usually are just like company names without too much of information. They're like, what do I need to buy? These 3 tickers. I don't like that. It's I mean, a conversation like this, like more generalist, I personally find more interesting rather than what 3 companies would you buy right now and why, because that's the same old.
Yes, no, and I'm excited. I think also like one of the things we want to do with the podcast is that people understand mining better. Because even investors, the funds, sometimes you get the impression that they don't understand it. Like, you know, I think everyone is like a little lost in like all of the fuss and company names and like the big ones, right? But I feel that sometimes people don't really understand like the very basics.
Yeah.
And and I think that's something also that we want to do with this podcast, like really talk about what is it about. And And not just from a technical perspective, but what you were mentioning, right? Like there are so many things that come into play when you're doing an investment. So the government, the jurisdiction, like socially, how does it look like the people, if it's a historical, like traditional mining country, and the expertise that the people might have like locally, and what does that mean for the company, like all of these other aspects that are really not touched upon as much.
No, you're right. It's I mean, a lot of people don't understand that there's much more than, oh, I found gold, oh, let's mine it. It's a 10-15 year process that it's still extremely ill understood, especially by newer investors, right? Who just see, oh, gold's at 1900, maybe I should buy some stuff. But yeah, they underestimate how much work it is to actually bring a project into development and production. So it's
Yeah, and we actually wanted to make it more layman in good sense. So it's not technical. There is a big gap between what geologists can explain you and what an investor wants. So an investor is not a geologist and vice versa. So we can to bring this gap narrower, and this is very important to speak or to translate these two languages between geologists and investors.
Yep, that makes sense.
Yeah, we're doing a great mission. Great. So next time we will talk about
magnetic signatures and IP surveys.
Oh God.
Yeah. I don't know. The next time we can talk about like site visits, your experience in that, or something interesting that inspire people, like no one went to site, like normal people don't go there. Investors rarely go there. Of course they invited, but not investors go there. I think it's super, super cool.
Let's stay in touch and see what works. It's excellent.
Perfect.
Perfect. We enjoyed it so much, Thibaut. Thank you so much for being flexible and for accepting it.
Yes,
all right, no problem at all.
And thank you everybody for watching and listening to this new episode. Follow us in all digital media and all social media of Instagram, YouTube, Facebook, etc. Thanks a lot.